Hello and welcome to the How to Trade Like a Pro podcast. I'm Wieland Arlt, and in this episode I have invited Mr. Dirk Friczewsky from Germany. With Dirk, I have spoken about his way to become a trader, how professional trading looks like, and what you have to take care of when you start with trading. Before we start, please take a closer look to the show notes and read the disclaimer carefully. And now, let's go. I'm here together with Dirk Friczewsky. Dirk is a trader, technical analyst, and an expert when it comes to trading, analysis, markets. And therefore, this is reason enough to get into touch and discuss about trading, life, and markets. Welcome, Dirk. I'm happy to welcome you in my podcast.
Hi, Wieland. Thanks for having me on.
It's my pleasure. And as things traditional, I always like to ask all of my guests how everything started. So how did you start trading? What were your first steps when you entered the markets and when you became a technical analyst?
Well, starting from the beginning, I would simply say you all know that huge newspapers from the former times. You see something like the German newspaper, for example, the FAZ, which is a Frankfurt worldwide known newspaper. And you got all these lines with stock informations from A to Z. And you are simply questioning yourself, what the heck is that? Like when your dad was simply using that kind of newspaper, reading that newspaper, and you simply ask, what is all this information about? I have to simply say that my dad is not into stock trading and not into investing, all this stuff. So I was simply curious to get to know all this issues. And this was the very first beginning when I had the first touch with the markets, financial markets. And from year to year, started trading stocks, especially when it comes to that new markets area, 1990s, 1999, 2000, crazy things going on. Companies, you know it yourself, skyrocketing prices. So that was the very first beginning. Regarding stuff like single stocks and FX, for example, so foreign exchange started something like around 2004, and especially broadened that stuff when I went to New York City for a venture capital company, and I spoke to a lot of people from that area, traders from foreign exchange desks, investors. And when I got the chance to have something like cocktail receptions or some kind of meetings from analysts where I just simply went to and was really glad that I was invited to. That was the very first beginning. Simply burning for financial markets, being interested from night to day and from day to night.
Yeah. I mean, this is very interesting, and I think it's very important because, you start as retail trader, having, some thoughts about making, following your own ideas, but then eventually starting off becoming institutional. But now, as far as I know, you're back on the retail side, just doing everything on your own. Of course, all your services you offer, but you're back on the retail side and away again from New York City and from this basis. So when it comes to really follow that road, and you mentioned that this passion, would you consider this passion for markets is really a prerequisite to move on, or is it something like where you feel like, oh well, it's a job like any other?
Well, to answer the second part of the question, yes, it is a job. You need to think about that like it is a job. It's nothing like gambling or nothing like private stuff you simply do from 1 hour to the next hour and then you do something else. So I would see, just be real, just do that for some circumstances, for some reason. And the other thing is getting prepared, being let's say, being something like taking this for real. How would I express that one? Especially when it comes to you start a day like preparing your views on the market, your setups possibly. You need to do that. You can't simply step into the market having just a coffee and that's it, and step into one trade and that's for sure. So that's not the way it works. I would say respect and discipline. So these two words, simply the two most important things, I think.
Yeah. I mean, why do we need to have respect? I mean, in general, if you compare it to the job, maybe you should have respect for your customer or for your boss, for your manager, things like that. But what do you have to respect as a trader?
As a trader, in my opinion, you have to respect that the market consists of a lot of high frequency trading systems, a lot of high professionals with tools and computer systems and velocity. You simply can't compete from a retail trader's perspective. So in case you think you might be able to trade the scalping style or whatever, I would simply say no, because the latency of high professional trading systems is so enormous, is so fast. In a blink of an eye, everything is done for them back and forth. And you simply start thinking about entering a setup. So I would say this is the reason I simply switched from that a little bit of faster approach I used to have when I was a little bit younger to that swing trading to position trading style. Because simply something like it's better for your own health, I guess. Something like cool down, think about what you're doing, have something like a little bit more, like a slower approach. Be able to have some more research, not only the technical aspects, sometimes the fundamental aspects or the sentiment on top. So this is something I would say as a mixed style. So something like a interdisciplinary analysis approach. So this is,
I mean, that's an interesting point you mentioned. Like you have all the algorithms going on and you have all the professionals while retail traders just think about, should I click the mouse? Everything is done already. So when I look at the markets right now and, everybody's talking about this prop trading and everybody wants to be rich quick and all this stuff. So is there really a chance for also a newcomer in trading to survive this game? Being intraday, being scalping, can you really compete? What do you think?
Well, it really depends some sort of time frame. So in my case, I already told you that swing trading to position trading approach. And I would simply say something like, slow down a little bit, have a look at the longer term charts. For example, the 4-hour or daily charts. And I always explain that, especially when it comes to some webinars for clients, I always explain them, just try to take one step back.
Yes.
Something, I simply explain that with that kind of an impressionist picture, being absolutely in front of the picture. You don't see anything. You only see some dots, some colors maybe. And the more you get back, the more you see the picture. And I simply try to explain them in case you want to see some trends and some sort of more information from the chart technical aspects. Just step back a little bit from the time frames and go into the 1 hour or 4 hour or even daily perspective. So you're able to see some kind of a trend move. Otherwise you don't see anything. I mean, where is a trend in a 5-minute chart or a 1-minute chart?
Yeah, you have one too, but it's a 1-minute chart trend. So, yeah, but that's something a lot of people struggle about, because it's something you feel like, I have to open a chart and basically it's true. So you open the chart and you see the moves and you see an uptrend, a downtrend, sideways market. So you see all of this. But if you're on a 1-minute chart, it doesn't mean anything apart from that what you see right now. But in the broader picture, it doesn't happen at all and nobody cares. So that's basically the question. If people go for all these challenges and, like everything that happens really, if you go to TikTok or somewhere else where people are really showing off, hey, I do click, done. Is this really the game to play, or is it
it's
a little bit fake and showing off? What do you think?
It's a lot of showing off and fake. And I guess this is getting rich quick schemes like sitting on top of a Ferrari or Lamborghini in Dubai. It's the picture some people show on TikTok or even on Instagram and all these kind of social media channels when it comes to trading. And I think this is a dirty game. Of course, everybody needs to talk about losses and be real. Everybody who's only talking about winners, this is kind of fake, because when it comes to trading, you have a lot of losses to survive. Yeah. And that's some kind of a topic. It's called psychology and the psycho effects of trading. And if you're not able to manage that kind of a psycho effect with yourself, then you're already done. And I think the most important thing is every time you simply try to get into a new setup, it's always a fight with your own psychology, with your own psycho stuff. Because you need to be able to stop being greedy or to stop being, less frightened of something. Just to act a little bit of smart. When it comes to losses, I always explain people, and doing that for a lot of years via Twitter, my Twitter X Dirk feed, or also post losses. So when there's something going completely against me and I'm not willing to stand against that, I simply say, well, this is a loss. Take the loss before it's over. And this is one thing I always explain to new buyers as well. Everybody started with a lot of losses. Myself, I started with crashing 2 accounts. But if you compare that with other traders, maybe from the institutional sides, it was my own money. I shredded my own money and not the money of some clients. Yeah. So this is a different kind of learning. It's a painful way of learning, losing your own money.
It is. It definitely is. I mean, we're sitting in the same boat here. So I think, at least it's 2 times, maybe it's 3 times, but now discussing some numbers, it's like, it's something you can afford to lose, whatever this means. Like let's say that's 2, 3, or 4,000 euro dollar. And if you have a job and this job is quite okay, keep it like this, you can make this back with a job, but still it sucks, honestly speaking, right?
Absolutely. Yes, absolutely.
Yeah. But it's a good learning. And it's true. If you have other people's money, like you're having it was just a mistake. So sorry. But it's not my money, Oof. No, it's not nice. And you don't learn anything because you just get fired and you just have there's no reason to learn and question yourself. So it's a huge difference, I think, right?
So, well, and on top of that, I would say there are a lot of institutional traders who are really good. No doubt about that. But in case you're something like an institutional trader trading for clients' money and simply shredding money, of course, it depends on your colleague who tells you, well, this was the 3rd or the 4th time in a row. Now you got to stop or you're simply out. If that is the case in that kind of a company, well, it's obviously is a good company. But you know it yourself, a lot of companies out there, they possibly don't stop. They simply overtrade, whatever they do. And the whole money is gone, or 40, 50, 60, 70% of the client's money is gone. So that's not a good commercial for that kind of company.
Yeah, definitely it is. And so the question is, what is the best way to go? And speaking of, you said you switched from scalping, and over the time you went more and more into swing trading, which is end of day mostly, I guess, which is most convenient and it's not so time consuming. So what would you suggest for somebody who just wants to start and really want to see how it works? Going from day to day is quite, boring, put it this way.
Well, yes, a lot of expressions would fit into that, like boring, and boring. And did I say boring? Well, it is boring for someone observing that. But that kind of an attitude, you say it is boring, is maybe the danger some new buyers have. They think they need to have action. They think they need to do something, and they tend to overtrade all the time. Or they tend to take too much risk and do something like revenge trades. When it comes to losses, they simply want to get them back immediately. And these kind of revenge trades kill them. And of course, I'm speaking about all these issues I once had myself. And when I speak to clients, for example, when it comes to brokers, some webinars, I always tell them using some kind of technical indicators. For example, the relative strength index. It's one of my most beloved ones. And of course, something like EMA 100 or 200. And if you see them in combination with the relative strength index, for example, on a daily basis, and something like measuring, simply having the picture that this kind of a stock or that kind of a currency pair is extremely off from that kind of an average, and especially the RSI is simply oversold. So that kind of a combination gives you some kind of, let's say, confidence to step in with the first trade. So something like dipping the toe into the cold water and try to find out how it works. And later on, maybe if you're convinced and that kind of a bottom you already fished is going the right way. So this is something like really, which really helps. You could combine that with MACD as well. You could combine that with a lot of other stuff if you like Fibonacci retracements or pivot points.
Bollinger Bands, like I do.
Okay. This is something I simply don't like. Everybody has some kind of his own babies, of course. But if you see that in combination, I simply tend to tell them, try to use that and try to figure out if you can simply see some signals for you, setups for you with the help of these kind of indicators in that picture. But do not use too much. So sometimes I see charts, they are so overloaded with so many indicators, lines, channels, whatever you see, you don't see anything anymore. You really have issues with seeing where is the stock right now, where's the right move right now. So it's too much. So less is more, I guess, and patience. Always try to sit on your hands. I try to do that myself. Sometimes I still have the feeling, possibly this is the nice move right now. Possibly I should try to start that kind of a setup right now, that entry point right now. And then suddenly I tell myself, well, I should wait, let's say, for FOMC minutes, or I should wait for some official economic data, what is going on. So possibly that kind of data is dragging that kind of a stock or that kind of a currency pair more down to an even better starting point for me.
Yeah.
So
now let's put these things together, because I really find it interesting. So you say, well, yes, of course, I'm doing the swing trades. Naturally, it's more like at the end of the day, like when markets close and everything is just a setup. But still, it's really important also to understand. But still, you're sitting in front of your screen during the market hours, watching everything carefully, analyzing, seeing where where will the moves will go. And as far as I understand, you still willing to open a small portion of a trade just to see how it works, but not really in terms of being really short term, just having a few pips or points or cent, whatever, but really going for the bigger move during a couple of days. Did I get this right?
Yeah, you got it right. Yeah, that's the version. I can live with that kind of approach. In the case, for example, let's have some kind of an example. So just one trade, for example, one trade example was a stock I rarely touch because that kind of stocks like Lufthansa mostly suck. But in terms of relative strength index on the daily and weekly basis, this stock was on a daily almost in direction to be single digit. On a weekly, it was 11 and 12. So this is so dramatically oversold. And of course, for some reason, we all know that what happened in Israel, Palestine. So that was the reason mostly that this kind of a sector was really trashed down, beaten down the road. So this is something like a trade, like a reversal trade. You think about, this is something I possibly could grab right now.
Right.
So this was one portion of the trade scenario when you simply start, let's say you start with 100 or 200 stocks and you simply add into that.
Yeah.
Yeah. So, and then the turnaround suddenly comes. When it comes to managing that trade, sometimes I tend to overreact too fast and take the chips off the table. I tend to take the winners a little bit too fast. Well, let's name it a kind of a luxurious problem, maybe. But I tend to take them too fast, and sometimes later on, maybe I should have. Well, that's a typical stuff you shouldn't do. You nice. That out, it's done. Yeah. So then that's the next scenario you need to concentrate on.
Now we're talking fear, greed, and regret.
That's right. Yeah. And this is something that nowadays, or especially the last years when it comes to platforms, when everything went into the right direction for private traders as well, then you got so many tools taking that kind of, excuse me, that kind of a platform using taking profits to just to hammer that kind of a line somewhere. This is my point where I simply want to exit, no matter what happens. And I'm not there. I'm not in front of the platform. I'm not in front of my screens. So this is the line of my exit. And this is something, of course, which stops your greed, your personal problems. You simply use the platform and the technological approach to simply get rid of all these kind of greedy problems.
Mm-hmm. Let's discuss management, because you mentioned management already. So, and when you talk about your approach and how you enter the markets, and when I follow this and I just visualize some kind of chart, I see markets going down. Then I see how the indicators and the oscillators, they just move into overbought or oversold in that case. So they are oversold. You feel like, okay, now it's time to enter the markets. This means you open a part of your general position just to feel how cold the water is. And then what? So where's your stop loss? How do you manage losses in that case? As it appears you don't have a hard stop that time, right?
First of all, you got your mental stop loss first. That's right. So you need to be aware of the fact how deep is this kind of a stock going far down the road, in case you want to think about, oh, well, I simply touched the wrong point. I need to exit that immediately. And I think when it comes to that first step, I would say after 5%, it's done. If there is a position built into that, yeah, you thought about a reversal and about that strategy. You thought about this is going up to the last wave where it came from. So that is something like it goes to 10% minus. You simply kick it out. Mm-hmm. When it comes to where to take profits, where to check it from the chart technical perspective, you see a chart for example, let's draw some chart like a single stock, and you see there was a wave and suddenly there was a sell-off and going really down into the oversold territory. You simply touch that one. Everybody tells you don't catch a falling knife, but someone needs to, otherwise it's not working. So you simply buy this kind of a reversal try. You see that picture, of course, more to the left, and see where it came from. So there was another touch, another wave to the former reversal. And you simply see, okay, this is my goal. It comes back to that kind of a wave, to the bottom of that wave. So this is my target. And when it comes especially to FX, like Euro US dollar, or especially Euro US dollar, have a look at the daily or 4-hour charts, and you see these waves. And when it comes to reversal moves, or let's kind of name it this way, a wave back always goes to the last low of the former wave. Mm-hmm. Check it out. Mm-hmm. Check your charts out there, and you will see it's really the way. Combinations with technical approaches. Of course, you could add sentiments. I told you before, you could add some fundamentals, and especially maybe if people are capable of doing so, and if they have the ability of using that, they could add order books, orders, option expiries, whatever they like to add, which is useful for them. Yeah. They need to figure out what kind of stuff works for them. Mm-hmm. Something is working for me. That doesn't mean it works for you.
Yeah, let me add something, because it's obvious that it's not, you're not talking about hard stop, except like -5, -10%. But I feel like it's really important and necessary also to say for audience that the position sizing here is very, very important. This is the key, I guess, right?
Yeah, when it comes to opening positions, let's for example spread that in two divisions. One is the CFD, or let's say the margin trading. The other side is the investing, which is without any kind of margin, with real stocks, buying without any kind of a financial help out there or proper whatever. This is a big difference, of course. because you are able, if you know there is background, you will be able to feed some position and you still have money to feed in. That is something which convinces you and gives you a lot of positive psychological effects, of course. If you do something like marginal trading and be aware of the fact that, oh, this is something like, I need to be aware this kind of a drag down will kill my position and will possibly have effects on my total margin out there. So, of course, this is a big difference. And I always tell people like try to do the small trades when it comes to position sizing in comparison to your account. Doing like a 1% risk is a lot already. Doing like 0.5% risk, 0.25 is maybe way better for your own psychological effects, of course, for your account. And of course, on the other side, the profits are not that big. Of course, that is the fact. But you possibly survive just because of the reason there's not too much pressure on you.
Yeah, but that's the problem. If the profits are not so big, how can you ever make it, well, you can trade for a living unless you're already rich, whatever rich means. But, let's say unless you have let's say at least $100,000, let's put this on the table. So how can you ever make it? So as a retail trader, you're literally screwed because either you have already your money, but why should you be a trader then? That might be some thinking of other people, or you want to be wealthy and you want to start, but you don't have so much money, so you have to take over more risks. And now we're talking again about being scalper or being swing trader, right? So what is the solution here?
I'm totally against that getting rich fast schemes, as I told you, and of course you are on the same side.
Obviously.
When it comes to beginners, and they tend to have the thoughts about I want to get rich with trading, I think this is the first mistake they make. I think from my perspective, it is not the way of getting rich. It is the way of staying wealthy, of getting interest, of earning interest every day. So I'm not willing to be the one parking 10K or 50K at the bank for a ridiculous amount of interest rates when I can get something like 5, 6, 7, 8, 9, 10, whatever. I'm not speaking about 50% or 100% and whatever is out there, screaming. I'm speaking about let's say a 10% interest every year. If you manage that, you're really good.
You're already better than most of the fund managers.
Yeah, if you do that every year, you're really good. And this the only approach I, in my opinion, have. I simply do not want to lose money because I worked for that. I don't want to get it killed just by the effects of inflation. We all saw that negative effects the last 12 to 18 months. What was happening, and people were not able to compensate that somewhere. Yeah, they simply lost money, and in case they have some kind of a nice fund with a 4 or 5% interest, well, that's nice for them, but in fact they still had a negative performance because of inflation. Yeah. Yeah. So in my opinion, it's simply keeping that kind of a money, and in fact of telling someone who starts into trading and wants to build up wealth, maybe he's better positioned in doing something like a mix between a trading and an investing approach. So not taking the single risk on a single stock, which is possibly a total loss one day, but taking those bigger stuff like indices and trying to figure out with the help of technical indicators like the relative strength index, like MACD or whatever, to ride something like a trend and to try to buy when everybody is screaming and to try to sell when everybody is absolutely happy and wants more and more and more. So this typical, it sounds so easy. Buy the fear and sell the greed. I mean, this is always people are talking about, but in fact, it's all, yourself about seasonal stuff. And it's the same again this year. Even in that kind of atmosphere, it's the same this year. End of October, the wave started. last year, October, mid of October to end of October, the wave up started.
Yeah.
It is not something like rocket science.
No, it's not. It's not. Of course, you have to do your homework, right? So you have to see really what happened in the past. It might happen right now, and it might happen in the future again. So this is something. And yeah, I totally agree. Like selling the greed and buying the fear is exactly what you're doing when you're looking for oversold or overbought and entering the markets piece by piece and just building positions up and building positions down. Like
maybe when it comes to trading, we spoke about some single stock trading and indices. Maybe it's useful to tell our new buyers as well. They should simply stick to very liquid markets. So don't try to figure out whatever chart technical approach with penny stocks. I saw such a lot of stuff the last years. People are analyzing some illiquid stocks with chart technical approaches, and I mean this makes no sense. If you have something like a DAX 40 stock or a Dow Jones or S&P 500 stock, very liquid stocks, of course, that makes sense. And it is very useful to step into these kind of markets, I would say. And of course, for new buyers, it is very important to lower your costs, to be able to have a small winner, because so many people out there, they buy stocks and they have so high fees. Still, they have too much high fees. Yeah. And that kills their performance. Just that kind of thing I wanted to add.
Yeah, it's true. It's true. I mean, there are so many, there are so many things that come to mind, because there are so many different worlds when it comes to trading, which appear interesting for people, like short-term, mid-term, long-term, like scalping, swing trading, investing, like Forex, CFDs, like all the leverage products, futures, like stocks, or you go with ETFs, for a little bit more long-term maybe. So I always try to figure out what is best for a trader trying to make a living. I'm not just talking about people who want to invest and, just go for the pension funds, but people who really want to make a living, like changing their daily job for a trading job. But it's not that easy, isn't it?
No, it's not, it's not easy at all. And I need to add that as a very important information. Of course, I'm doing that full time, but full time doesn't mean that I'm only gaining money or only getting money from trading. So that's not the only point where I get money from. Maybe that is a big difference. When it comes to trading, a lot of people live from trading and say possibly they make a living and it's working the 12th month of the year. So of course this is a tough game. Be real, you need a really big account. I would say a minimum 6-digit account when it comes to daily gains. When it makes sense, you need to pay expenses. You have a living. You need to pay possibly rent. You need to go for dinner or whatever you have. Maybe there's some 1 or 2 or 3 mouths to feed and whatever happens. So there needs to be some real thoughts behind that when you step into that. And if you have something like a 6-digit account, let's say 200K or 250K, you're able to start with. Well, that's a nice position to start.
Yeah. True.
But you can't make a living from a 10K account. That's not working.
Yeah. And again, even though you have let's say 250K, dollar, euro, whatever. And you were mentioning, if you have 10%, you're already very good. But turns out it's 25K.
Yeah, well, I told you.
Before tax, which is at the end of the day, nothing.
Yes.
Right?
Yes. I told you, and this is something when it gets real, then people say they simply only live from trading. They need to take more risk. That's the one version, or they need to have bigger accounts. That's the other version.
By definition.
Yeah.
And that's why I really love to have all these discussions with colleagues, because how to solve this puzzle and how to really make trading work for everybody. There's no solution, obviously, but it's really important to understand for everybody who want to join us to know what he's about, or she, of course, right? So what this game is about, it's not about click, click, rich. It's about click, ooh, click, okay, ooh, okay, right? Something like this.
Yeah.
But it's not about being, just from scratch, being that successful, money's coming in like crazy, and you don't have to worry about anything anymore.
No, that's not the case. Yeah. That's not the case, of course. Yeah.
Yeah. So, and that's something really, it's kind of mission for me to make sure that everybody understands what he's into when we talk about trading. And I also appreciate your openness to say, yeah, of course, it's part. And the same is true for me, obviously. I mean, I have so many things going on with services and also coaching, training. It's all part of trading. And the same is true for you, right? Because you're an analyst, you publish analysis, and you do a lot of services as well. So what are you doing beside your own trading?
Yeah. So besides trading, as you already told, doing that for a couple of clients. I'm speaking about institutional clients. So I don't have private clients. I don't have anyone to coach from a private perspective. So there's no one calling me, hey, I need some help. Could you please give me some kind of a hint what kind of a market I should trade? That's not my business. The clients are brokers. You already know them. Of course, a couple of you work with them as well. From the German market or the European market perspective, and that makes sense for my business. So that's a B2B approach, which is kind of more comfy. And besides that, sometimes I'm arguing and I'm being angry about being a landlord. So that's not an easy game in Germany right now. So all this kind of stuff is something like, I would say, put your life and your balance or your finance on a couple of food. So you have 1, 3 or 4 or 5 ways to have money flows, to broaden that kind of stuff, which is very important. If some kind of, let's say one foot is breaking apart, then you're not cooked, you're not done. So you will survive. Yeah. So that's the most important thing of broadening, being some kind of entrepreneur and thinking about that from that kind of perspective.
Right. So to break it down, if I just want to start, let's say I have this so-called 10,000K account, and I feel like, I do my homework, I learn about technical analysis, and I do learn about strategy, psychology, all the stuff that needs to be learned either way. And then I feel like, I want to go into this industry. I want to be retail trader, but I also want to offer some kind of services. So what is the way to follow? Is it like talking to brokers, with banks? Is it just offering services? What do you suggest?
So the first approach is, of course, finding a useful broker for your approach with a very, or let's say mostly low fees. Mm-hmm. If that is possible. If it's not working with a fee model, so ECN model, whatever you name it, you possibly use some kind of a big name with a good support, a German support, for example, from that kind of area here, or from your country support. You need to have help desks. If something is not working well, you need to have some kind of a backup for yourself. You should use some kind of a trustful institution where you should know where the money is put, regarding segregated accounts, whatever. You need to know this kind of a useful regulation which is really worth the name regulation. For example, the Financial Conduct Authority in London, or the BaFin in Germany, or CSSF in Luxembourg, or whatever, naming that kind of, let's say, regulations. So that makes sense as well. Maybe it makes sense not to be, I don't want to call out names, but it makes sense not to use that for a very first touch with the markets with some kind of not so old institutions. So it should be something like a broker which is in the business maybe even more than just 1 decade.
Established.
That's the word, right?
Yeah. True. And then I feel like, it's also, people can follow different paths and follow different roads. So then feel like, yeah, we offer services, obviously, to brokers, B2B, we offer services B2C, but there are people coming up, well, let's have a Telegram group. I sell signals to anybody, maybe that's not really the road to follow if you want to really make a living. I mean, this is getting rich quick sometimes, but I'm not sure if it's really the right way to go or to follow, or if it's better to offer some serious stuff to the people who really makes a difference. And
as I told before, this is something like, in case you have the ability of doing your own research and you understand what you're doing and you have that kind of approach, you build it up yourself, the way you do research, the way you step into a trade, the way you use indicators and stuff like that. And it makes sense to build that up on your own and to trust your own research, to be confident what you already put up. And not only simply following some kind of a guru out there. It's not, even if I have a lot of followers on Twitter, I'm not naming myself. I would never do that, being something like an FX guru or whatever. Failures, losses happen to me as well. And people are following and simply adapting and copying trades from me. And later on, they simply tell me, hey, you shredded my money. I didn't invite you to follow my trades. All I do is just calling out what I do.
True.
So that's a big difference. That's a big difference. And of course, people are maybe sometimes they're lazy. They don't want to think and they don't want to work themselves and simply try to push that to someone else. This kind of a person later on is guilty when it didn't work. So it's your own money. It's your own pressing the buttons. It's you. You are guilty when it comes to losses.
It's a very, very important point also to understand when it comes to buying services or following people. I mean, YouTube is bursting with those people. Same is TikTok, Instagram, Twitter, Telegram, you name it. Everybody, So I think the biggest problem is that people don't want to take over responsibility for their losses. Because it's too devastating to feel like I suck in trading, I lost the money. Hey babe, I lost the money. You know what? He lost our money. It's even more comfortable, right?
Yeah.
And you don't get all the pain. You can just pass it over to somebody else. I think this is a huge misconception when it comes to trading.
Yes, it is, and especially when it comes to people like. They tend to mix up trading with gambling, and they try just to put some money on the table and try to double it. This is not the way to start trading. This has nothing to do with trading, and this has nothing to do with investing on top of that. So you simply need to be aware. You put your own money, you fund an account, you start your first setups, you feel it, the kind of a psychological pressure on yourself, on your own bones, on your own soul. You need to work with that. You got to live with that. But before you do that with your own money, you probably do something like a 3 to 6 month try and error game with demo accounts, for example, to figure out if that kind of a financial feeling, if there is something like a financial feeling in yourself, if you have something like the affinity to be with that kind of a market. Could you be really successful when it comes to trading demos and crashing one demo account after another? Probably not. So if you change to real money, this won't get better.
Yeah. I mean, we're running circles a bit because I always try to figure out how really coming up with a small account, being professional and disciplined, making money, but not just like this 10%, which is already good, but not enough for decades, not enough. So might prop trading be the right way to go? What do you think?
Well, it's a kind of a new, well, it's not that new, but it's coming up month after month. In the last quarter, I guess it got more and more extreme. I had the feeling. Don't know how you think about it, but everywhere you just check some websites or whatever, you see some kind of advertising for prop companies. And I mean, I don't know about all that kind of their processes, how to enter that, and what do you need to achieve to get the first step of prop trading firms' money. I don't know about that. Maybe it's working for them. Of course, they obviously they make a good money, a good share of that. People are working for them. People are trading for them. They get a nice share, and other ones possibly in the end of the day are not that lucky. From one day to another, maybe they shredded the account and maybe they need to pay back. I don't know how it works. I simply don't know how it works. I simply didn't figure that out because I was never interested in doing that.
Mm-hmm. Yeah, but it's too tempting, So because you feel like I don't go anywhere with my 10K or 15 or 50, I will just sit there and get a couple here, a couple there, but I cannot make a living. But then having the opportunity to get, money from somebody else, having a funded account, let's say 250,000, and, all the game changes immediately. This is what it looks like. But of course, it doesn't look like this for everybody. Once again, it's just a small amount of people really just making it and being able to get this funded account, being able to stay alive the whole time and really making money out of this. So once again.
Yeah, well, let's be real. I mean, you see it yourself every time you open a website from a broker in Europe. That's the ESMA rule. You see that percentage of these clients are losing money. You see that every time you just click on the website, you see that from quarter to quarter, the percentages are changing, but you see something like percentage points between 65 and even some worst cases, 90%. So imagine 90%, or let's name it 80%, whatever, 70 is far enough. They are losing money when trading. Mm-hmm. So you are the lucky bastard belonging to the other side. Even if you don't earn too much, you're not losing. That's the first pot you gain. That sounds ridiculous, but it is the way it is. In case you open something and you always have the feeling as a new buyer, I start into that kind of a setup. Mm-hmm. Oh man, I'm simply 10 minutes in the market and I'm way down deep in the red. What happened?
Yeah.
And you always have the feeling and that kind of first thought of new buyers. Oh, the broker is guilty. That's the one. It must be the broker. It's someone else. It's not me. What did I do wrong?
I got the wrong signal with the wrong broker.
And everything. Everyone is the one who is guilty, but never. It's never yourself. Never you. Right. So, and the first step, the first learning is it is you. It is always you. You are pressing the button. You choose the broker. You choose the platform. You choose the way of funding your account. You choose the version. Am I an investor or a trader or doing both? You always choose. You are the person responsible. Take responsibility for your own money, but do it right, and don't gamble. So that it sounds easy, but in fact, just try to be real and be honest to yourself, and try to figure out which kind of a trading style fits, which kind of a time frame fits for you, and maybe it's working better the next day, in the next weeks.
Yeah.
This is the only thing I could say.
Yeah, it sounds reasonable. And yeah, again, it's always the same question. How can I really succeed in this business? How can I really make a living as a trader, as a starting trader? How can I make a living with not so much money? How can I evolve? How can I get better? All these questions. And as a last topic, let's discuss psychology a little bit more. And
let's mix that. Your first attempt of that question with your commenting question, you will be coming up in a couple of seconds, please.
Yes.
How can I survive, and how can I add, and how can I build up? Is simply the answer is taking chips off the table from time to time, not overreacting, not trying to ride out winners and to ride it more and ride the horse until the horse is dead and falling apart. And this is something like I do myself. I'm not only telling them, let's say one account, a 50K account. And this is a 50K account. I made the 10% last year and this year. So I'm only doing that because I'm just taking that winners off. Yeah. I'm not overreacting. Okay, they could be running further down the road. Of course they could, but I simply took that out. So then you are simply feeding into some other setup, or you simply start a new setup, but always $100 here, $500 there, building that stuff up. And then at the end of the year, you suddenly have 10% for the whole account. This is the way, building it up.
Yeah.
There's no big figure trade waiting for you immediately. And this one is running into the whatever 50% or 100%. This is, of course, nice. This is very rare, I would say.
Yeah, it's true. It's true. So, and this also answers the question of what you already said, that you put off, some money from the table once in a while, whenever things appear. And it's a decision you have to make. And which brings us to psychology again. We're talking fear, greed, revenge, regret, all this stuff. And discipline is also some kind of psychology, obviously, because it's part of the personality and behavior. But so maybe in a nutshell, what do I have to really take care of as a trader from your point of view?
Well, regarding that psychological effects and that kind of settlement, which is something like to see that in combination, is really watch out what is going on out there with the big boys, with the big flows. So the big money flows. And of course, it's not very healthy to be 100% against the big money flows or the possible next money flows coming in regarding seasonality, regarding that when it comes to high professional traders calling out their positions because they need to. They need to file. They need to file their positions. Excuse me. And the bigger they are, of course, the more they are visible for others. I always had that kind of a seminar, for example, at the World of Trading as well, for COT data, one part of the story, for example. And if you're into that and you kind of like to swim with the masses, with the big boys, well, that makes sense. But if you try to find a reversal or something like anticipation of a reversal, you're probably screening that kind of COT data as well. It even works for FX from time to time. And it makes sense to just observe that as well when you see the for example, managed money is going massively short, so massively that you simply doubt that this is going further down the road, and you try to anticipate that there is a reversal just around the corner. So this makes sense, and this makes you a little bit more confident, I guess. And in case you have research ability to do that your own and to find that out on your own, well, that makes you even more confident, I guess. Trust your research. Trust your own research. And don't let a fuzzle in all that social media crap and whatever is coming in on your feed, on your social media feeds or whatever news feeds somewhere. I don't want to spread negativity about people writing about columns. We do it ourselves. But of course, you need to pick out the right ones. This is bullshit. This is serious. You need to know which is the good source. Where is the good source for me? The source I can trust. Something like that. Yeah.
Well said. And looking at, wow, we already made 1 hour.
So in the end of the day, there was no pressure and it was a good talk. So it's time.
That's what it is.
Fast. Right? Yeah.
So thank you so much then for all your insights, your wisdom, your experience, and I'm pretty sure we'll continue this one day again. And so once again, thank you so much for sharing, and see and talk to you next time. Thanks.
Thank you very much. My pleasure, Wieland. Have a good one. Bye-bye.
That's already it, and I really hope that you enjoyed this episode and you took away some learnings for your personal trading. If you want to learn more about me, about my interview partners, if you want to have a one-on-one coaching or even get into a training course with me or my interview partners, just get into the show notes and follow one of all these links you find there, and then I will be happy to hear and see you again. Your Wieland Arlt.